All right, so this is week 14, outlook number 1. Let's go ahead and begin with the British pound futures. All right, so starting out on the daily time frame, let's go ahead and clear a couple of these annotations on the chart here, and then zoom into the area of interest. So in week 13, I explained the overarching price action that we were looking for and the reason why this was such a very sensitive area to analyze and look for opportunities in. And then we narrowed it down to the current price leg in which we were looking and what the concurrent analysis is going to be. I detailed out the analysis following the bearish macro bias from the 4-hour/daily time frame. And then I also detailed out the counter bias or counter bias and counter analysis that would occur. And then I did something very special, which I rarely ever do because I rarely ever look out that far, but it needed some sort of recognition, was I zoomed out to the monthly time frame to understand how this price action was evolving and why we were stuck in sort of a consolidatory period inside of this price leg post break of structure of this daily structural point or previous structural point. And so that's what led us to seeing that on the monthly, we were in the completion of a bullish move. And that led to this run here. And then after that bullish move, where we cleared this liquidity point, this led to be a draw in liquidity or liquidity draw, and that led to price running lower. But not only did that lead to price running lower, we saw that on the monthly that it was a mitigation of a monthly area of interest, which was a price gap. And so that led us to seeing two actions playing against each other. And so thinking of it in sort of physics terms, and seeing the weight of those actions play out, it shows us that our first inclination of seeing actions play against each other, that structural actions are more important than inefficiency actions. And so what we saw was a monthly liquidity draw coupled with, multiple time frame confluence liquidity draw played against a mitigation. So a simple area of interest mitigation on the monthly time frame. But we see that the liquidity draw on the monthly time frame is supported not only by the monthly time frame, but by the daily. And then we have successive actions of mitigation on the daily and the 4-hour time frame. And then we have another action coupled to all of this, to the mitigation of this liquidity point here / structural point. So we have a summation of literally a bunch of actions on multiple time frames versus just one action on a monthly time frame. And so if you think of it from that standpoint, we can literally see that that overwhelms the action of mitigation on the monthly time frame. And so that was the kind of logic that I had in mind when I was looking at the charts and basing off of what the action was going to be and why the bearish bias is supported so heavily. And so moving down to the 4-hour time frame, but we could clearly see it from the daily time frame, I explained that the liquidity draw here that looked like it was going to break the price leg moving higher and break our bias actually ended up being exactly what I called it, a liquidity draw. And we can see that even though all of this price action was very well balanced, very well mitigated, there was nothing over here in the impulse side of the price leg to lead us to believe that price would, go higher. But nonetheless, price decided to fake out and clear out all the liquidity and perform structural action that allowed for triggering of major orders on the very, very tip of the premium side of this price leg and led to this action here. And so it actually, after further analysis, it ended up being a play. The optimal play here actually ended up being this liquidity draw based off of the liquidity draw model that I have. And there was a 10-minute sponsored candle inside of this post the liquidity draw that ended up being the play. But yeah, missed that. It is what it is. And then you can see there were also multiple opportunities afterwards to get in on the play, but you don't want to chase a play, especially if you can't see it in the immediate. And so anyway, all that to say, we broke the price leg, and I said afterwards that we would begin free fall because we have now essentially mitigated those orders that were looking for price to, all those buy orders that were triggered in the discount post the break of structure to move higher. All of that was just to run this high and balance the orders inside of the premium. And so backing up just a little bit and forgetting the charts at the moment, remember that trading, one of the basic principles of trading is just the equalization of buy orders and sell orders. Every single sell order has to be paired with a buy order. And so if we are inside of a range or technically a price leg, no matter what we think about the price action, if you keep that in mind, that all price is trying to do is balance buy and sell orders, that will very much help your intuition build when understanding why price is doing what it's doing. Even though it seems like it makes no sense, if you follow that very basic principle first, that price is trying to balance buy and sell orders, it will help your intuition grow, not only in understanding the markets, but technically understanding price action. And so in this price leg, this is what triggered that basic principle, is what triggered me looking out to be like, this doesn't really make sense. I see that we have the mitigations. I see the price action being balanced, which is the very core of why I always say price is always looking to balance. I'm like, I see the actions of mitigation. I see the actions of, or the structural actions, which are the liquidity draw break of structure, which are really the actions of transition that I coined. And then I zoomed out and I see like, oh, we're battling not only on the macro perspective or the daily and 4 hour, we're battling on the monthly time frame for domination of the market, whether it's going to be bearish or bullish for the perceivable future. And this just happened to be the area that decided it. And then we saw that if this is going to be the case, and we failed to break this high, then that means that we just had another structural action that is going to spark and fake out the liquidity and clear out the liquidity inside of the premium that balances the orders that led to this run to take out this high. That's going to give us the price action needed in order to finally break out of this monthly area of interest and finally break out of this price leg and move lower. And so that's exactly what we got. That's a lot more detail and a lot more knowledge of how I'm viewing this price action. And I very much want you guys to understand that if you're going to, subscribe to this school of thought around price action, is understanding, one, that everything is derived from price action is always about looking to balance buy and sell orders. Every action afterwards that is derived from that is literally from that. That's basically it. Look for a balancing of buy and sell orders, and then you'll be able to more intuitively understand how price action is moving. All right. So anyway, all that being said, we got the break of structure out of the price leg. We now see that the bearish bias is playing out. So we should be looking for continuation of bearish price action yet again, as we have before. And we're looking for now the continuation towards our next structural points, if we're looking at it just from the 4 hour and daily. And so I coined the term, free fall. That's exactly what we should be seeing here pretty soon. There's nothing left for price to, in my eyes, show that we're going to move higher. This should just be looking to start targeting these lows. We've accumulated enough sell orders, enough sell pressure. The sellers, the bearish orders, bearish sentiment has won the market right now, so we should be looking for continuation towards this low. This is another little sensitive area, but it's not really relevant to me that we have a low here. This is just another liquidity point, and so we see that there is a little sensitivity to it. But the major point that I was looking for was the price leg low, not necessarily this low. This is more of a structural point, especially if we look at it from the daily. It probably dissolves into something. Yeah, so it's just another, liquidity point here. I would, it's not really a structural point to me, but this one is more so important. And so I would be looking for price to, start moving towards this liquidity point, this structural liquidity point, structural point, and this liquidity point as well. Or I should say specifically structural point rendered into a liquidity point, because it was a structural point when we were bullish, but now because we're bearish, it has now been rendered into a liquidity point. All right, so cool. That's what we're looking at here on the British pound futures. Looking at gold, not much to say. We're just still consolidating inside of this range. As expected, we're inside of a range. So yeah, we'll just wait for more price action to play out. All right, on the NASDAQ. All right, so once again, we talked about the price action. I'm actually going to go down to the 4-hour. We talked about where the range was. I detailed out the range for the first time, saying that the range low was here, the range high was here. We had the last mitigation of, an area of interest on side of the discount, or on the side of the premium, on the premium side of this range. I explained that everything, literally everything on the premium side range is completely balanced. And so the only logical option after mitigation of this would be to start moving lower, taking out some of these discount side liquidity points, and also looking for discount side areas of interest to play out of. And as you can see, there hasn't been really many areas of interest to look for. It's really just been an effort to clear out these liquidity points, and we are starting to pick up momentum as we move towards this ultimate structural point that's holding this range together. And so if that's the case, if this breaks, then this will go into free fall, just like the next pair that we're looking at in the Dow Jones. So the Dow Jones broke the range that we were looking at, which was from the low to this high, and we are now in free fall for the Dow Jones. We are clearly we've transitioned from a bullish range into a bearish run. And what's also very interesting about this bearish run is that, once again, everything inside of this bearish run, the price action is completely balanced. This is a very efficient bearish price run. All of the areas of interest, all of the price legs that have been generated are balanced. There is nothing left for price to return to inside of this bearish run in order to become an area of interest. Everything will have to be a structural action, meaning we have to run a high in order to liquidate more orders for us to go lower, or we're going to potentially transition to bullish price action. But in order to transition to bullish price action and to have that sustained, well, we have a new all-time high that will lead us to seeing that, hey, once one of these highs are taken, that'll transition us into a bullish range or a bearish range. That won't transition us in a bullish price action. That will literally just transition us into a bullish range or bearish range. And so that wherever that happens, we'll have a high all the way down to wherever that low is. And then we'll have a very large bearish range with very efficient price action. So which means that during the bullish term, very anticipatory, and during the bullish term, this will probably be a very low effort, high volume liquidity run, taking out lots of these highs very easily because everything is efficient. But for now, we are sticking to the bias, and we're sticking to price continuing to give us the trending market as we go lower. And so this is no longer in a range. Like I said, we're looking to take out liquidity points. And so it'll probably be a little bit easier to look at it from the daily. But yeah, you just literally just pick out lows, and then we look to see what the actions are as we continue to target them. So the next low, the next ultimate low that we're looking at is actually going to be this low. And then you see this low, and you just keep picking lows because we're still in a bearish run. And until we have a clear break of structure that solidifies our range, there's nothing to discuss as far as bullish price action. We are in a bearish market on the Dow Jones, and we are trending that way on the NASDAQ once we break this low, if we break this low. But yeah, that's it for this outlook. Week 14, let's have a great week. Peace.